as offers of terrorism cover vis-à-vis the pools that were created after September 11, the terrorism pools which were created among many insurance companies and whereby the governments would kick in on the upper layers. Thank you.
If I take the different classes first, terrorism insurance historically was written it was a peril within an all risks type property policy and largely also in the marine market. The events of 9/11 led to those perils being stripped out of those classes, so it became its own standalone product. I personally specialise sorry about this. I personally specialise in the property damage, business interruption perils as a result of terrorism. But however, there are many underwriters that are able to offer the life elements, the liability. They're very much bought as standalone products. Certain territories actually may have a sub-limit for a liability, certainly within its property damage, but generally these limits are very small and the capacity is very small. Aviation war, aviation terrorism is a class that actually was written long before the events of 9/11 and has been a standalone class for many years. And again, a very sophisticated market with a long history. Hopefully that answers your question with respect to the classes. With respect to the pools that were developed as a result, or certainly introduced as a result of 9/11, most notably the French Garriott, Spain's Consorcio, Germany's Extremis, other Trier, certainly in the US, have all been developed as a result of the terrorist incidents of 9/11. We as a market, myself as an insurer, are able to provide capacity within these as really on a treaty basis to support these pools. My syndicate is a member of Pool Re, which is the UK pool, which prohibits me from writing any UK standalone terrorism. However, I support the pool and provide capacity as a market within a large treaty. Pools are becoming more sophisticated. They're more due to the low level of losses within certainly the Western world's pools. Capacity is increasing every year, and thankfully, buyers of insurance within the pool are getting a product that hopefully caters their needs. Where they need additional cover, that's when you see people opting out for a standalone placement and where the pool can't meet their needs.
Thank you. Again, here the title of the lecture is Political Violence in the Mediterranean Region, but I see the coverage actually was worldwide. You talked about worldwide, so there is no focus on Mediterranean region. And in explaining about the Egypt case, you mentioned something about establishment of the Muslim Brotherhood movement in the 20s. What do you mean? I mean, are you driving at insinuating that this political movement was involved directly or inspired violence and terrorism in the whole area? Because they are actually now, they are recognized in so many countries of the world, and when you now put them in the light, that they are possibly a part of political violence in the Middle East. I don't know whether this is what is meant by you. And my other question is, do you see a declining trend of political violence and terrorism worldwide at the moment? And consequently, also the volume of I would say compensation and claims are also on the decline, which could mean also lower premiums for this kind of coverage or not. Thank you.
Okay, thank you. If I take your question regarding Egypt first, it's widely perceived and well read that certain terrorists within the Mediterranean, Middle East region looked to certain readings, certain literature by from political supporters of the Muslim Brotherhood in Egypt in the 20s. But as a political party over the certainly last 30 years, it's now developed into a recognised political party and a strong supporter of the Egyptian government and economy. Historically, it's fair to say that this body provided teachings that were probably widely misinterpreted by certain terrorist groups. So that's the first point I'm aiming at. With respect to the class, terrorism as a whole, you're right, there are certain regions that has declined. Certainly the buying public have reduced their amount of appetite or their need for the class. Probably the most prevalent country this year as a marketplace we've seen is Sri Lanka. Early this year, probably aware that the Sri Lankan government almost overthrew its separatist group, and almost overnight the buying public in that territory has stopped buying coverage, which is as a marketplace is a good thing to see. There are certain occupancies that will always buy major brand hotels, airports, especially large oil infrastructure, where the threat of terrorism will always remain, just due to the amount of destruction and damage can be caused on any of these occupancies. However, the general, as a whole, other countries that we've seen a decrease. Certainly in the UK, we use Northern Ireland as a good example. However, there are territories where it's increasing, and due to the increase and the amount of capacity that is attracted into Lloyd's, rates are more competitive now than they were any time, most recently. On average, rates have probably decreased almost 20% year on year since early 2000s.
Thank you very much for a very informative presentation. My name is George Caban from UIB. I've got 3 questions. First question is, what do you reckon at the moment, or certainly given the most recent statistics, is the premium income derived from the MENA region, which I would define, broadly speaking, as from West, the Maghreb countries, including the Arabian Gulf countries, and the Near East and Asia. What is the premium income, and what losses have been paid as a market? That's the first part of the question. Second part of the question is, what, if any, claims have Sagicor paid in this region? So that's the first question. Second question is, I must assume that Sagicor is an entity that looks to various channels of distribution, and therefore how does Sagicor manage its potential conflict of interest in tying itself to the mast of one particular intermediary, and how does that fit in the context of compliance and treating clients fairly, and to avoid adverse selection, whether positive or negative selection in favor or against the insurer? Thank you.
Okay, thank you. Take the premium income questions first. Premium income, generally speaking, in the Arabian Gulf to GCC, is probably around $100 million now. It's ranked third as a region, largely after South America first, and then North America. So it's a large buyer of the class. It is probably skewed by 2 territories, Iraq and Lebanon. These 2 countries, certainly Iraq is a recent buyer of the class. However, large amounts of infrastructure being built, large amount of companies moving into this territory, requesting cover, skews the premium average for this territory, very greatly so. Second most populous or most largest buyer of this peril within the region is Lebanon. Lebanon, as I said earlier in my presentation, is a sophisticated buyer as a territory, was buying this type of cover well before 9/11 and probably would date back to the early 80s. Again, premium levels in this territory can be reasonably high in comparison with lower risk territories. Hopefully that answers your question with premium income. Yeah. Sagicor's experience of claims in this region is nil. I haven't suffered an incident yet. There are certainly market claims that have been within Lloyd's. Most notably, the hotels in Egypt were market losses as that came written out of the marketplace. And there's been incidents in territories all across the region. Certainly Iraq has its fair share of claims. We are not a major, Sagicor themselves are not a major reinsurer of Lloyd's business, of Iraqi business. However, we do have little bits and pieces that we feel are safe, reasonably safe areas. So Sagicor as a whole hasn't paid a claim in this area. I've paid enough, believe me, in Latin America. Distribution channels. My point being here that yes, Sagicor do have a relationship with one of the major providers of expertise in this region. It's very much, my point being, no matter how many times I come to to Lebanon or the region, I will never have as much experience as any local carrier or local market. I can't be here every day and know what the market rate is, what clients really want at any one time. So I have a relationship with I believe a company that does have that expertise and market knowledge. That limits me to a certain extent in what we see and what we write. However, there are London brokers there are brokerage firms like yourselves that have a very strong presence in this region and have a very strong London team that business is shown that is sent to London and that I will see from the Lloyd's building. So where Shadid may not have a presence in London, they're able to deal with me direct. With the big worldwide broker firms like yourselves, the Aons and Marshes of the world, who have strong teams in the region and are able to place it through strong teams in London, we support those, of course. It's basically I try to provide a product that's the right product for the market. Often by the time a product gets to London, a request for coverage gets to London, London tries to sell its product that it wants to sell, that may not be the right coverage for the client. It may be just a general standard wording that London insurers issue at any one time. But hopefully with a presence locally, I'm able to give what the clients and local cedants want to buy.
Thank you, gentlemen.